What if I told you that reading stock charts is like reading a story, and once you know the language, you can predict what happens next? In the next 5 minutes, I'll teach you everything you need to know to start reading charts like a pro. Hey everyone, welcome back to BH Investing Journey. I'm your host navigating the exciting world of investing right here in Singapore. Today we're covering the ultimate beginner's guide to reading stock charts, no fluff, just practical knowledge you can use immediately. By the end of this video, you'll understand exactly what those green and red bars mean and how to spot profitable opportunities. First, let's understand what we're looking at. Every stock chart tells you three fundamental things: price movement. The vertical axis shows the stock price time. The horizontal axis shows the time period, could be minutes, hours, days, or years. Volume. Volume bar colors indicate the price movement direction for that time period. Think of it like this: if Tesla stock moves from $328 to $310, that's the what. The volume tells you the how much interest there was in that move. High volume with price movement. That's significant. Low volume. Maybe just noise. Now, the most important part: candlesticks. These aren't just pretty colors, they're telling you a complete story. Green, bullish. Closing price higher than opening price. Red, bearish. Closing price lower than opening price. Each candle has four key prices: open, where it started; high, highest point; low, lowest point; and close, where it ended. The body is the thick part between open and close. The wicks, or shadows, show the high and low extremes. Here's a pro tip from my Singapore trading experience: long wicks often signal rejection. If you see a long upper wick on a Singapore REIT like CapitaLand, it means buyers pushed the price up but sellers fought back. That's valuable information. Let's move to support and resistance. This is where chart reading becomes powerful. Support and resistance are like psychological barriers. Support, a price level where the stock tends to bounce up. From resistance, a price level where the stock tends to bounce down. From how to identify them: look for areas where price reversed multiple times. Draw horizontal lines at these levels. The more times price respects these levels, the stronger they are. Pro tip: when support breaks, it often becomes resistance, and vice versa. This is called role reversal. Super important for timing your entries and exits. Let's add some technical indicators to make smarter decisions. Moving averages, MA, 20-day MA, short-term trend, 50-day MA, medium-term trend, 200-day MA, long-term trend. When price is above the moving average, it's generally bullish. The low, generally bearish. Volume analysis, volume confirms price moves. Rising prices with rising volume, strong bullish signal. Rising prices with falling volume, be cautious, might be a weak move. For Singapore stocks, I particularly watch volume during the first and last hours of trading. That's when institutional money often moves. Charts form patterns that repeat. Here are the essential ones: bullish patterns, higher highs and higher lows; uptrend, double bottom, W shape; bullish engulfing candle; bearish patterns, lower highs and lower lows; downtrend, double top, M shape; bearish engulfing candle; triangles, price squeezing. Remember, patterns work because they reflect human psychology. Fear and greed drive these patterns, and they repeat across all markets from SGX to NYSE. And there you have it, your complete guide to reading stock charts. Remember, this is a skill that improves with practice. Start by analyzing one stock each day using these concepts. If this helped you understand charts better, smash that subscribe button and hit the notification bell. I'm constantly sharing investing insights specifically for the Singapore market. Drop a comment below: which Singapore stock would you like me to analyze next using these chart reading techniques? I read every comment and often turn your suggestions into full videos. Until next time, keep investing smart and stay curious about the markets. See you in the next video.